Yo guys, it's John here with Option Lab, and in this video, I'm going to be responding to the top 10 questions I got in this Reddit post I made titled, I did 2.2 million in 2024 with Theta Strategies, Ask Me Anything. So it got about 249 comments, and before I start, I wanted to show my account so you guys can see Jan 1, 24 to, this is from Jan 7, 2025, a little over 2 million in profit. So just don't want anybody commenting, oh, you trade a fake account or whatever you guys like to comment. Anyway, I told you a bunch of you guys in my free Discord I'd make this video because there were a lot of constructive questions as well. By the way, if you're not in my free Discord, Option Lab, click the link in the description. The first 10 people to DM me print. I'm sending all my 2024 trades that I track on this massive spreadsheet, as well as giving you guys this option selling cheat sheet that explains all the strategies I'm about to outline in this video. Okay, so let's go through and kind of go one by one, and I'm going to answer to the best of my ability. So the first question, what is Theta Strategies? And I think that this guy, Responsible Egg, meant to say, what are these Theta Strategies? And somebody commented selling out of the money premium to capture theta/time decay. Yes, that is true. So if you guys are not familiar with Theta Strategies, let me just outline kind of what it is. So the most typical and basic example would be selling a cash secured put, where you have a stock moving and you sell a naked put or sell to open a put. And for doing so, you receive a premium. And as long as that stock stays above that strike price by expiration, you keep a premium. And the beauty of this is you have a massive margin to win because the stock, a lot of the times I'm choosing strike prices that have a 70% probability of profit. Okay, so that's what I'm kind of doing. So let's move on to the next one. And this is kind of a good one here. How do you identify which stock options to sell? So a lot of you guys are familiar that I trade the wheel strategy. This involves selling a cash secured put, and then if I'm assigned those shares, I sell covered calls or try to flip the stock for a profit. And Lord of Grange here commented, gold is always my go-to. It's old, thick, slow, and more predictable. Anyway, the criteria that I'm using to choose the stocks that I'm running the wheel on or entering spreads on goes as follows. I'm looking for stocks that are either extended to the downside on longer time frames, and most importantly, I'm choosing ones, stocks or strike prices where I'm willing to own the stock at that price, right? So if I'm selling naked puts, I want to know that I'm comfortable owning the stock at that price if I'm assigned. Enough premium at a sub 30 delta for the risk. So I'm choosing strike prices that have a 70% plus probability of staying above that strike price by expiration, and I keep my premium. I'm averaging in with more CSP contracts as the stock drops, and if I'm assigned, I'm selling covered calls and then more cash secured puts to collect premium on both sides. Anyway, that's kind of how I'm doing this, which options to sell. And also, I have a ton of scanners set up, right? So the scanners are scanning for things like IV, because the higher IV means higher option premium. And since I'm a net seller, I want more premium. Also, things like simple standstill return that gives me kind of like which strike prices have the most premium relative to the amount of money that I would need to own the shares if I were to be assigned. So that's kind of getting into the nitty gritty, but that's the basics. Next, this is a good one. Why did you make this post? So I responded, to flex a poor return. Why else? This guy says, makes sense. Have to marry one, Paris or Swift, and why? I said, these days, probably Swift. I'd rather trade $1 billion account. And Phil3 to Fishy approves this message. Anyway, I thought that one was funny. Okay, let's go to the next one. What is the most you've ever lost on a bad run? How much money did you start out with when you began trading options? And how do you handle the swings? So the first one, what's the most you've ever lost in a bad run? So this past year, I took an absolute bath on SMCI. So SMCI, when their accounting firm left the company and the stock plummeted, and then they were on the verge of being delisted, I was kind of selling naked puts all the way down as that stock was dropping, and I was continuously being assigned shares. At one point, I was down 700K on that. That has since gotten significantly better because I averaged down, and then the stock ended up bouncing. So this has gone significantly down since then. But that was my worst play, and that, more generally speaking, we can discuss when you are trading cash secured puts, right, and you're doing it on higher IV names, you have to be conscious of your position size, right? Because if you're trading a high IV stock with a lot of movement and you start writing naked puts and now you're assigned those shares and the stock keeps dropping, you have to carefully manage your position sizing so you don't get overexposed into any one position. Okay, so next, how much did you start out with when you began trading options? Well, this is kind of a dumb question because it's just changed. All right, at one point I was trading on a 20K account, and it's just since grown as I've pumped more money in. But as you guys know, I make a lot of videos on small accounts, and in my Discord, I help a ton of you guys who have smaller accounts turn things like the wheel into more small account friendly trades like the bull put spread or iron condors. Okay, next. Let's see what this one. What is Theta Strategies? We covered that one. Okay, here we go. So this person asked, I have also commented on your other posts. It's refreshing to see the comments on this post compared to the other one. I am sorry, they're a bunch of jealous assholes. Okay. I'm now getting into options trading, and I'm starting with a capital of 500 to 1K. Just want to make around 1K a month, really. You have any strategies or tips can you please share, guys? So first of all, with 500 to 1,000 starting capital, making 1K a month is not realistic, right? That's doubling that's 100% on your account in 1 month. That's absolutely unrealistic given these strategies. I'm aiming for something like 3 to 5% of my entire portfolio on these strategies per month, not 100%. So if you're trying to make it 1K a month with a 500 to 1K account, you're better off buying options. And when you start buying options, when you're gonna start to realize you're just gonna start losing money. So with the option premium selling strategies, aka Theta strategies, you're looking more for 3 to 5% return per month based on how aggressive you're getting. So this is a slower, more consistent strategy, not something that's going to double your account in one trade. All right, next. Let's see what's over here. Roughly what percent of traded names are single stocks versus index ETFs like SPX, ES, NQ? Any plans to change that proportion for 2025, assuming you'll sell premium at the same rate? Okay, so roughly what percentage of traded names are single stocks versus ETFs? So I'm mostly trading single stocks. So something like AMD would be a single stock, or like I said, SMCI or Google or Facebook, right? How many puts am I selling on things like ETFs? Not a lot. Typically, the premium isn't great on those. If I do sell them on ETFs, it's to add to a long position, not necessarily to capture a ton of juicy premium. So a lot of this was on trade single stocks, not a lot on index ETFs, and there were quite a few on just the plain old SPY, right? So as the SPY was dropping, I like to hold a pretty substantial long-term position in the SPY. So I'm selling puts to add, right? Hoping that at some point those are assigned and that adds to my long position that I have on the SPY. And then in turn, I can write covered calls on those, on that SPY position. Okay, so any plans to change that proportion for 2025? Not really, but I will caveat that by saying if the market continues to drop and the SPY goes down, I increase the rate at which I'm selling puts on the SPY, right? Because over time, if you guys are familiar with any of the basic famous investing books, it's pretty hard to outperform the market over a 10-year period. So I do like to be assigned shares of the SPY. So if anything, as the market drops, I'm changing my position size to a lighter position, right? So that I'm not super overexposed in case the market continues to drop, but I am adding into positions that I hope to own long-term via cash secured puts. Okay, let's see. Baruz Talibov said, that's an impressive return. Could you share some insights on your risk management and how do you structure your Theta strategies? Did you focus on specific sectors or diversify across the board? Great question. Okay. So risk management, like I said, one of the most key things if you're trading these types of strategies, let's just say, for the wheel strategy, typically I'm not tying up more than 2 to 3% of my portfolio value on any one position. Meaning, if I were to be assigned on that naked put or cash secured put, whatever you want to call it, I'm only ever required to fork over 2 to 3% of my portfolio value to then own those shares. That means I'm not overexposed to any one position. So that kind of answers the risk management question, right? I'm scattering these across the board, across a lot of different names. Okay, did you focus on specific sectors or diversify across the board? So that goes back to this, right? What I'm doing is I'm looking for stocks that are extended to the downside or overextended in general on longer time frames, or that have had kind of like a outlier move right off earnings or something, and I'm selling sub 30 delta puts or credit spreads or strangles on those stocks, and then if I'm assigned, writing covered calls. Okay, so I answered here. I said I'm typically writing puts on oversold sectors / stocks I can stomach holding if assigned or believe I can quickly flip for profit with covered calls. So I'm naturally contrarian, so many of my hunches are trying to own stocks that are oversold in anticipation of a reversal. So one of my favorite strategies, guys, is watching for upcoming earnings. And then if there's a big drop on earnings and I like the stock, I'm selling puts even further below where that stock just dropped in anticipation that that's going to revert and recover, and I can make kind of like a quick profit off of that high IV environment post earnings. So I said here, typically with higher IV, I'm looking at 7 to 14 DTE for Theta strategies, sub 30 delta, often sub 20 delta. This makes sense, right? The more risky the position is, or the more risky the name is, I want to give myself a higher probability, move further out of the money, and shorten my time frame because I don't want to be exposed to that potentially riskier stock for any longer period of time than I need to be. And then I said here that I mixed it in with some safer 30 delta plays on other names. So things like the SPY, I'm comfortable going at a 30 delta. And if you guys are familiar with Tasty Trade, they have a ton of back testing on this type of thing as to why that works. Okay, I think that concludes it. But if you guys did find this video helpful, please leave a like and subscribe. I'm trying to get to 1,000 subs. And if you haven't already, hop in my free Discord. First 10 people to DM me print. I'm sending all my trades for 2024 as well as my option selling cheat sheet. And I'll see you guys in the next one. Peace.